People are afraid of doing wills because if we do a will, we're going to die tomorrow. Or if we do life insurance, we're going to die tomorrow. Look, life insurance, disability, critical illness, they're all have to do with risk. The bank wants you to buy mortgage insurance, which is nothing else except life insurance. Mm-hmm. They don't put it as that, but that's what it is. And
it's a very expensive version of life insurance.
It's a very expensive version of life insurance.
Hey friends, welcome to the next episode of our podcast. Today I'm joined by Gary Opolsky. Gary's been a friend, a client, an advisor of us since the early days of Hosper Mortgage. And the reason why I wanted Gary to come in today is because of his expertise in the insurance field. So Gary, take it from here. Please finish that introduction. What else? Tell us what else we need to know about yourself.
Oh boy, there's so much. What can I do? I don't even know where to start. Okay. Gary Opolsky here. I got involved with life insurance. I started my own agency over 40 years ago, and I'm still working. I love it. I have great clients like James and people at Hosper, and a lot of professionals and business owners. And I'm a father of 3 kids. 2 of them are married. One of them has provided a boy and a girl, grandchildren for us, and my wife is very happy about that. And I don't know. It's been many years of getting my act together here as a business owner.
Well, but clearly you've carved a niche. So I would love to touch on the family side. I know we had
Sure.
a little bit of chat off camera, but let's get to that. Let's talk first about, I guess, your niche expertise. So tell us more about sort of your specialty when it comes to insurance, and what do you focus on, and what are the areas you, what's the first way you try to help a potential client who's coming to you for insurance?
Well, the most important thing for me is risk. I look at things like what happens if they get sick? Mm-hmm. What happens if there's no more income? Mm-hmm. Obviously, what happens if they pass away prematurely? What happens to the income of their family, the status, etc. And I've had many clients who have gotten ill, and fortunately their disability insurance and often critical illness insurance have come into play. Mm-hmm. And one of my clients actually he says he has a shrine in his home for the disability insurance that I set up for him. I've actually never seen the shrine because I have been to his home.
But you've seen the payments.
I've seen the payments to him, and I'm so glad that we were able to help him. Mm-hmm. And there's so many ways in which I feel I've helped people along the way. Mm-hmm. More often than not, many of these people have some kind of insurance set up. Often life insurance, often nothing else. Because no one has really advised them well. Mm-hmm. Because in my opinion, most insurance advisors out there are just there to sell life insurance. They don't know much about disability insurance or critical illness insurance.
So on that topic,
yes,
let's take a step back and
Sure.
let's educate. So I've been fortunate to learn from you and your partner David Lewis, and but let's pretend we don't know anything, and let's talk about the main types of insurance. You're
Sure.
just getting into them, but break them down for us in as simple terms, how they're differentiated from each other.
Okay, I think most people are quite aware of life insurance. There's a lot of advertisements on TV and billboards, and throughout the people's careers, they see things about life insurance. Mm-hmm. And life insurance is very simple. If someone passes away, there's a certain sum of money that goes to a beneficiary. It could be a spouse, it could be kids. One of the things that people get pummeled about as soon as they apply for a mortgage is the bank wants you to buy mortgage insurance, which is nothing else except life insurance. Mm-hmm. They don't put it as that, but that's what it is. And
it's a very expensive version of life insurance.
It's a very expensive version of life insurance. Plus, the banks love it when people buy it because the likelihood of someone dying in the first 20 years, if they're 30, dying before 50 is minimal. And by then they may have paid off their mortgage. The bank's got sucked all that mortgage insurance money, and they don't pay out. It's very rare. So they really like it. And the problem with mortgage insurance in place, I have a big bone to pick about mortgage insurance, is that you buy the mortgage insurance, okay, great. And then you find out that the lender 5 years later is not as good as another lender. And you want to move, but you've had a little health problem. And you go to the new lender, and they say, well, we can't give you the insurance because you had some high blood pressure or whatever. And then you're stuck with the original lender paying an extra 0.25%, which could be an extra $1,000 a month, depends on the size of the mortgage. And these days, with mortgages being on average $1 to $1.5 million, which is hard to believe sometimes for an old guy like me, and then you're stuck.
So the advice I'm hearing is it's important to decouple the insurance from the mortgage.
You're so smart. You should be in insurance.
Well, I'm in mortgages, so I got half of the equation down already.
Yeah. So yes, you're absolutely right. We always tell our clients decouple. Do not have the bank insurance because A, it's typically really expensive, and B, why would you want to be a prisoner of an institution that keeps you locked in if you can't move? I want to be able to change my mortgage without having to deal with life insurance. It's really simple. I don't know, but people don't know that. Most of them don't have advisors. They don't ask the banks, and banks often make it feel like you have to buy it.
Yeah.
Because otherwise they won't give you the mortgage.
Well, and also you can put yourself in the shoes of many first-time home buyers. This is the biggest decision of their life up to that point, generally, financially.
Yep, absolutely.
They're seeing a number like $1 million or sometimes more than $1 million on the mortgage. They're like, well, I better insure this. But you should insure it, just not tied to the mortgage itself.
And when the bank says, well, it's $4,000 a month or whatever your payments are, and for an extra $150, you're insured.
Yeah, it doesn't seem like much.
It seems like nothing. But when it could be $100 a month,
it's 50, you're overpaying by 50%.
And you're decoupled.
Yeah.
And then you have other options. The banks make a ton of money and people just don't realize.
This is such a tangent, but I can't resist. People get strange when they think about real estate. Having someone that my wife and I, we bought our first house a few years ago. It's an irrational activity because you're so used to, operating in the normal world where you're trying to save a little bit here and there. And then all of a sudden you're talking about $1 million plus purchase.
Yep.
And 10%, it's like, okay, let's bid an extra 10,000. Like people, it almost becomes not real. It becomes like Monopoly money when you're thinking about it because it's such a out of the norm reality for a lot of people.
Absolutely.
So I can see why they would, when someone says, well, you're already paying $4,000 a month, you might as well pay $4,150. That it doesn't make them think, as opposed to if somebody came fresh and said, here's a $150 decision, do you want to commit to this?
Exactly. And like I said, I feel that there's a lot of pressure. You go to a bank and they say, well, yeah, okay, fine, we'll give you a mortgage. But really, you should insure it with, nudge, wink, wink, like you need to do it with us. And people just say, sure, I sign. They just sign away that stuff because there's just so much in a rush to get it done.
So we touched on life insurance. That's the one people understand. We had a nice little tangent adding on the bit about mortgage insurance because that's maybe a pitfall. A lot of people are maybe not are missing those savings opportunities. What would be the next most common category of insurance that you advise?
Well, still on the life insurance, people don't plan properly. They have the mortgage insurance, whether they buy it through an agent like myself or they buy it with the bank. It doesn't really matter. At least they've got it. They often don't plan properly. They have 1 or 2 kids, 3 kids, and what happens to them if they die, 10 years later, 5 years later? Is there enough money to provide for the family for long term if the spouse doesn't work? If the spouse does work, there's so many elements to those decisions. And I have to tell you, all I say to clients like yourself, James, the only thing that I am is I'm a mirror. I say, James, here's the mirror. Ask yourself these questions. And here's the mirror. And you're saying, okay, what do I do for the next 10 years, 15? How do I protect my family? And I'm actually in the mirror because you don't have the answers because you've never really thought about it. Because and 99% of my clients have no clue about life insurance.
So Gary, if you could only ask 3 questions to your clients into the mirror, what would be the 3 most important questions you would ask?
The most important question I have is, what are your values? What's important for you? What are your big concerns going down the road? And I want you to answer those questions. Because if you can't answer those questions, then I've got to push you to, I got to say, you know what? You pass away in 5 years. You bought a big house. You got 3 kids. You want them to go to private schools. I don't know what you want to do. What is it you want to do, James? Do you have an answer for me?
So for me,
Yeah,
I want to make sure if something happens to me,
Yeah.
my wife and child don't have to have, they should have the same level of financial stability as if I was still there.
Okay, fine. How much money needs to be invested in Hosper or elsewhere to provide that level of income for the next 25, 30, 40 years? So, I don't know. It's a big number, let me tell you.
So that second part is more mathematical, but it requires the answer of the first part because you have to know what we're trying to math towards.
Exactly. And I'm the one often, I say, look, here's a little computer thing. Tell me how much money you need to spend every month, blah, blah, blah. And I say, okay, fine. It says here that you need $4 million based on a rate of return, your income tax on that rate of return. And people say, $4 million? Are you crazy? I said, I didn't do anything. The computer said that. So this is where people can't think out. A lot of people say, oh, $1 million is fine. And then I say $1 million at 3% return, $30,000. You pay almost no tax on that. What is $30,000 going to do for your family?
Right. So people are making decisions or may make the mistake of just saying $1 million feels sufficient because it feels like a good big number. Left my family $1 million, but they didn't actually do the second part of the equation, which is let's work backwards to figure out how long that's actually, or work forwards. How long is that actually?
They don't do the math, and typically they don't have an advisor to assist them in with the math and make them feel comfortable with their decisions.
Do you think there's an element of avoidance because it's an uncomfortable thing to think about?
Absolutely. People don't want to do wills. I have to tell you, in my professional, in the last 20 years, I've worked with a lot of lawyers. And I typically say, you don't have a will, right? And they look at me like, how did you know? These are people with kids.
Because it's a safe bet? Is that why Or
you
could just tell by?
Because they say, oh, the guy down the hall is going to give me the will. We've talked about it. He's not going to charge me. And then I say to them, you are the last person on his list because you're not paying him. So they just don't get it done. I've met people, I have to tell you, it's scary. They've got a couple of kids. Oh, yeah, we're getting the will done. Don't worry, we're getting it done. I say, okay, that's great. And they, a year later, they haven't gotten the will done. And people don't understand there's huge ramifications having minors and both of the couples die. The money goes to the state, to the province, it manages it. They can't even, the grandparents, et cetera, can't even intervene because there's no will. It's deplorable. But, I can't force people to do certain things.
But you can give the advice.
I can give the advice for sure. And one of the nice things about insurance and life insurance, and this is something that most people don't know, is that in an insurance policy, you can actually set up what's called a contingent beneficiary, which might be the kids, with a trustee. So if the parents both die horribly in a car accident and the kids are 3 and 5, the money goes to the trustee. It doesn't matter about the will. It bypasses a will. It bypasses the estate. If there's no will, the money will still go to the trustee to take care of the kids. And there's a horrible situation where the parents kill someone in their car, the estate is frozen. You can't get money out of that estate until that's resolved. But if you do it right, the trustee has the money to take care of the kids, maybe for many, many years. I don't know. So again, these are things people don't know. And it's really sad. Why would they know? They don't have an advisor. It's
right. So the key here that I'm hearing is this is a reality of life that needs to be faced.
Yep.
And it's better to do it early. Like many things in life,
Yep.
It's better to just do it early.
But people are afraid of doing wills. Because if we do a will, we're going to die tomorrow. Or if we do life insurance, we're going to die tomorrow. It's sad. It's irresponsible.
Maybe it's as simple as it's just uncomfortable.
Of course it's uncomfortable.
It's just like people don't talk about money, finances enough. I think there's a lack of financial education.
Yep.
Because it's uncomfortable. I might say the wrong thing. I might talk about how much that I make too much or too little.
Yep.
And it's just embarrassing and uncomfortable. And I think one of the objectives of bringing these topics, we talk a lot about investing.
I know.
And that does involve numbers. And I think it's just important to bring it to the forefront. And I'm involved, as you may know, in charity with youth literacy too, like youth financial literacy specifically, because it's not taught. So
that's correct.
Yeah, I love that we've kind of uncovered already. I think there's just like a few takeaways already. One, a simple one. This is a freebie for the audience. One is just you should have insurance on your mortgage. Just it doesn't need to be directly tied to your mortgage.
Yep.
Decouple that.
Yep.
And maybe we'll get to a list of other freebies and ways to save.
For sure. Happy to do that.
Okay, let's keep going on the topic of the different types of insurance.
Okay.
So we'll probably come back to life insurance because of different tax and professional structures. But
that's right.
But to keep it at a high level, what are the other major types of insurance?
Well, when I started my practice, because you were asking me how did I start my practice, I focused on disability insurance. I spoke with a lot of professionals. I was able to uncover areas where they weren't properly covered. And that's how I built my practice, by helping them make sure that should they get sick, they would have support. Because when you think about it, if you're self-employed, there's nobody who's going to, it's not like being in a big firm that's maybe has some kind of benefits in that case if you're sick, even though typically it's not very good, but leave that aside. If you're self-employed, most people don't set aside these days. There's no sinking fund. They don't have $1 million or $2 million sitting with Hosper to take care of them if they get sick, or with a bank or whatever, because life is so crazy. They're not saving anything usually, and if something happens, if they get sick, they have to draw those funds from somewhere. And, they may or may not have funds. The spouse may or may not be working. But typically, if someone's making a couple $100,000 a year and the spouse is maybe making 100 or 200, I don't know, they're using up most of that money paying mortgage, paying school fees, food. They may have help in the home. I don't know. And one of them goes down, as I say, gets sick. Where is that? The funding doesn't there. So where do they get the money? They have to pull it out of savings. Mm-hmm. And you don't want to do that if you can, because when you start pulling money out of savings, your long-term retirement plan goes to hell.
So simplifying what you just explained, if someone's, a disability event happens,
yep.
Not only are you pulling it earlier than expected because you plan to have more years to accumulate your nest egg, but you're potentially also pulling more than you needed before the event because you may have other medical expenses and costs now too. So
absolutely.
So then the disability policy, let's make it, as I know it's a complicated matter, but so what does that cover? When I was asking the question, what events are covered, what are not? What's the test on that?
Just basically anything that causes you to have a loss of income. It could be a heart attack, stroke. It could be like me. I had 4 car accidents that caused me to be partially disabled over the course of 5 years. I've had another 6, but they didn't bother. But I've had a lot of car accidents. Not my fault. People who are watching, it's not my fault. And you can be safe on the road. I will not hit you. But it's a big hit, and it really hurt me. But fortunately, I had disability insurance that helped shore up the loss of income. And so that's an important element. The other important element in planning these days, because it's relatively new, is major illness coverage. I've had many clients who've had a heart attack, a stroke, and some kind of cancer. And most of them have bounced back, and they've been back at work. And these policies said, one of them said, it was like I delivered a check for $500,000. No tax. It's like, hey, do whatever you want with it.
This is the critical illness policy?
The critical illness.
So just to make sure where everyone's following.
We've
life
moved from
insurance,
disability. Right.
Also, there's critical illness.
Right. And critical illness and disability complement each other.
Mm-hmm.
Critical illness is a big lump sum of money. I often try to tie it to someone's mortgage so that if they do have a major illness, they may or may not be able to go back to work. We'll leave that aside. But they get a big check, $500,000, $300,000, $700,000, and that can put a dent into their mortgage or pay it off, so that their standard of living is much cheaper.
Mm-hmm.
And if they have disability insurance, you don't need as much. Your costs of living are down,
Mm-hmm.
so you can manage. So they complement. That's sort of it. Critical illness is for heart attack, stroke, cancer, Parkinson's, kidney, if you, organ transplant, organ donation. I don't want to go into all of the things, but there's about 25 things it covers.
It's 25 things that, God forbid, you hope doesn't happen.
Of
but
course.
If it does, you have a financial compensation that either shores up your nest egg or provides a lump sum to pay for the cost of whatever that event was, or your mortgage. So that's one less thing you have to think about.
Yeah, typically people use the money. One of my clients said, "Oh, great, I'm still okay. I've always wanted to do a new kitchen, so we did a new kitchen."
And there is that potential good scenario where not only do you recover fully, you also get the payment.
Most of the clients who've had critical illness claims have recovered well. One of the clients has Parkinson's, and eventually it's going to impact on her career. But, until that happens, but she got paid a critical illness claim. Whatever she did with the money, I think she paid off her mortgage. But one of the things that people don't understand while they're doing everything's great, that when something bad happens, like a heart attack or a stroke, the stress on those people is immense. And what is one of the biggest stresses you think would happen to you if you couldn't work for a while?
What would be one of the biggest stresses that would happen to me? Well, I think. Can I give you a really simple example of that?
Sure. I'm just asking you a question.
Yeah. So I shared with you recently about my child. Of course, what I do day to day running this business. I wasn't feeling emotionally stressed. In my head, I wasn't stressed, but all of that compounded, and I actually had mouth ulcers where I had canker sores, and both my dentist and my doctor, who I consulted, first question they asked, "Do you think you're maybe a little stressed?" And I just said, "Well, I just had a newborn. I'm trying to balance that at work, yada, yada, yada." They're like, "Okay, it's stress." So I think the physical manifestation of stress is something. So if you already are if you're already ill and your immune system's weaker, and then you dump stress on top of that, I can imagine it could only compound and make the situation worse.
Okay, I'll give you a great example. It's really a quickie. Sorry, Mr. Cameraman. This is quick. So I went to a pool store many years ago, 7 or 8 years ago, and I was in there a long time, and I'm allergic to chlorine, but I didn't know.
Okay.
So I get in my car. I've got the stuff in the trunk. I'm driving home, and I'm not feeling well. My breathing is compromised, and we live 2 minutes from the store, not 2 hours. I get to my street, I turn the corner, and I have one more street to turn a corner. I stopped. I thought I couldn't make it to my home, which was exactly 20 seconds from where I stopped.
Wow.
And I got out of the car, I stood, I must have looked like I was going to die. A very kind neighbor, he and his wife were in their car. They stopped their car, they got out, they said, What's going on? I said, I don't know, but I live around there, and I don't think I can't make it. So one of them got into the car, drove me home, ran up the stairs, said to my wife, call an ambulance. They called an ambulance. They came. They put oxygen on my face. They said, what's the date? And all that stuff. And it got me to a hospital. I got fixed. I was fine. But I'll have the moment that I was sitting with the oxygen, I'm thinking, okay, how much life insurance do I have? How much disability insurance do I have?
Wow.
Will my wife be okay? Will my kids be okay? And I said, you know what? We've invested enough money. Yeah, they'll be fine. And that was my thought, because I thought I was going to die. I was, it was, as you can tell, it was a very emotional moment.
Sure, of course.
Because I didn't know what was going on. So it was like, of course, I'm on the verge. Mm. And the stress was incredible and probably didn't help whatever I was going through.
Of course.
But they figured it out. I needed oxygen to counterbalance it's like First World War, they used mustard gas.
It's like that.
What's mustard gas?
Yeah, it's chlorine gas.
It's chlorine. You know this stuff. People died from that. So my lungs were filled with chlorine. And
wow.
I'm obviously very sensitive to chlorine. But they flushed it out of my system with the oxygen, and then I was great. I went home and I had a meal.
But I think so. Wow. But of course, I think what the memory that makes understandably emotional is that thought: is my family going to be okay?
That's the first thought, and I think when people have a heart attack and they're lying in a bed at the hospital and they're thinking, "Am I going to survive? And what's going to happen to my family?" And I think the fact that they say, you know what, I've got good investments, I've got life insurance, I've got maybe critical illness insurance, I've got disability insurance if I survive, I'll be okay, they'll be okay, and the stress level goes.
But here's something interesting I think about hearing that story.
Sure.
I think it's common that most people's first thought was, are the people I'm going to leave, or are they going to be okay?
Absolutely.
Your natural reaction was processing that. Are they going to be financially okay? Are all the numbers?
First thing was money.
Money, right? And
Absolutely.
That's probably from your 40 years of trained experience.
No, I don't think so. I think it was visceral. I think, are they going to be? Oh, it wasn't like, oh, let's see, I'm an insurance agent. No, it's like, holy crap, if I die, are they okay?
So, but what you said about being able to bring the stress down is you actually were able to answer those questions in real time.
Right.
Because you went through and what you know to be in place.
Right.
Versus somebody who maybe doesn't have those things in place. They're left wondering, for as long as that experience is, are they going to be okay?
And I think the point I was trying to make is that if someone's sitting in a bed in a hospital or in an ambulance and they've had whatever, a heart attack, and they're thinking, what's going on? Am I going to survive? If they don't have some of that stuff in their pocket, the stress level can make whatever they've got worse.
Right. Yeah. And we just talked about how stress can make a health situation so much worse. Right. So if they need to, wow.
Yeah. So, I mean, I tell my clients, look, you don't want to get sick. If you do get sick, if you have these things in place, by not having the stress level of someone who doesn't have this, it's going to help you get better quicker. Because stress with cancer makes the cancer worse.
Sure. So I'd like to try to interpret your expertise into my world, because I'm just noticing a parallel here, and I think it's enough about the mortgage space, of course, in the years we've been chatting about it. What I would translate is sometimes people are so focused on the actual return of the investment when they think about like financial risk, but emotional risk of investing is an important consideration as well.
Yep.
The point I'm making is mathematically is not the mathematics, just like your question. You need to ask the questions first before you use the math.
Yep.
Because if you just did the math, then it'd be a one-size-fits-all solution. There'd be an optimal number for everything. The way that you ask the questions into the mirror, so to speak, I guess I've been trained in my time in mortgages and specifically investing in mortgages to ask the questions, well, what will make you sleep at night?
Yeah.
And so I suppose that's the point I'm getting at. Like the point of the insurance is to make sure that the numbers make sense and that the math is there, that if something happens, your family's covered or you're covered in a disability event. But what's important, similarly with investing, is I want to be covered for the future. That's why we invest.
Of course.
But I want to have peace of mind now to know that my investments are safe, because I don't want the roller coaster of investing or white knuckling it to not know if I have.
Which is why I like the fact that you guys have 3 different levels of investing. I know we're not talking about insurance at this moment. 3 different levels, and if someone's really, really super conservative, you've got a super conservative.
Yeah.
If they're middle of the road, which is what my wife and I do, we're middle of the road. We've been middle of the road since we started. We were, I think, one of your first clients.
You were, for sure in the first 10.
Yeah, with
your
partner Nick.
Of course,
Nick, by the way, used to work for me.
Yeah,
and my partner.
We were going to figure out how to get that in there.
Yeah. So we knew Nick. We loved him, and when he started up the mortgage lending and started up the company, it was like, sure, I know this guy, I trust him.
Yeah,
he's a smart guy. And so it was, and we didn't put all of our money with you guys because we want to have, it balanced, which was pretty much what you said, because that's part of balancing your investments, balancing your insurance, balancing your life.
Well, why I wanted to have this conversation, Gary, is because, what we do is so similar in so many ways. It's all about planning. It's all about asking the questions into the mirror, so to speak. I love that. I've actually not used that phrasing, but I like that a lot.
Good. You can use it. You don't have to steal it from me.
Okay. Thank you.
You're welcome.
But it's an area that is so close to investing.
Mm-hmm.
In many ways, it's the same goal, right?
Yeah.
Plan for the future.
Yep.
Plan for your family.
Risk analysis.
Yeah, but it's just something that I don't think enough of our, and hopefully people tuning in are learning something about this, or at very least, light bulbs are going off to start thinking about it and to start having the conversation.
So there's one of the things I wanted to talk about, if we have a chance.
Sure, let's talk about that. Yes.
Okay, so it's still talking about insurance. I've met many people over the years.
Well, let's tell them what we're about to talk about.
Oh, okay. So what I'm going to, it'll fall in. I've met many people over the years. I've reviewed the insurance that they have in place. And typically people have insurance that they bought 5, 10, 15, 20 years ago. And the advisor who they started with is gone, because all that advisor really wanted to do was make the sale and disappear and sell more people, but never educate them because they don't want to take the time. I meet these people, I sit down, I review, what do you really need, what's going to work, what type of products work for you, and then I say, hey, you got $1 million, but we just talked that you need $3.5 million. What do you want to do about it? And they say, well, let's just do what you said. So I often find that these, and often these policies that they have are coming due for renewal, and typically we can save money on the renewals if they're healthy. So we typically just move them away from wherever they were, not because we're rapacious. It's just that it's financially sound. So one of the things I was going to say, the possible savings, is that people who have older policies, they often pay the renewal. They don't think about it. It just comes out of the bank. And they really should be looking at that and contacting me or my partner or any other bona fide agent out there to review your portfolio. Just makes sense.
So
because of the savings that you can accrue, and then you can have more money for Hosper.
So many things in life should be set it and forget it, but it's very important. This is so similar to mortgage advice, right?
Mm-hmm.
A lot of people they don't want to think about it, so they're in their mortgage, they just renew. They don't evaluate.
You got it.
And so that's exactly what you're saying. These are such big important things in our life, and sometimes they're large financial amounts.
Mm-hmm.
It's probably worth a review once a year. Would you agree?
Once a year, maybe not. I mean, once every, it's like they say you should review your will every 5 years.
Sure, even easier.
I mean, life insurance, if I sell somebody a $2 million, like I sell you a $2 million life insurance today, do I need to speak with you a year from now?
No, probably not.
But if you call me in a year and say, hey, we're having another baby in another year, okay, James, is $2 million enough? Let's sit down and talk about it. Well, you guys just bought a new house. Oh, my God. So more expense. Maybe $2 million just ain't enough.
So I think maybe as somebody who may get complacent with these things,
yep.
because you got your family, you got your business, you got those pressing matters. Saying once every 5 years seems easy, seems completely reasonable. But then the years go by, and you get to the 5th year, and it doesn't feel any different than the 4th year, and it's easy to just not do it.
Okay. Yeah, but we don't let you do it.
So that's what your
my partner and I, every year you get an email from our office with a statement saying this is what you've got. Sometimes there's a big red line saying this policy renews next year, and you're paying $1,000 a year now. It's going up to $10,000 a year in a year, and we really should review this. We've talked to you about it before, and they've just ignored us. But it's like it's coming time. And typically, if they're healthy, instead of it being $10,000 a year from now, we get it down to $5,000. So we do force a review, but not everybody wants to spend the time with us reviewing.
And I suppose there's those folks who had been sold policies by advisors they're no longer working with.
Sometimes.
And so they have nobody. There's nobody following up with them.
Well, they typically don't.
Yeah.
And that's one of my sore points about the life insurance industry is that there's a lot of people who just want to make a sale. My credo has always been since I started, if you become my client, you become my client. I've had clients, some of my clients have been with me for 40 years. And I think my numbers are that I've lost 2 or 3% of my clients over 40 years. They stay with me. And one of the reasons they stay is we take care of them. We drill down. We make sure they started a business. They bought a new house. Okay, you got a business partner. There's a buy-sell agreement. We didn't talk about that. What happens if one of you dies? You want to buy out the shares of the other person. Where's the money going to come from? Your business doesn't have the money. And now the bank's on your case because you've got a big line of credit. Where's that money coming from? So it's all of these things. If there's no planning, there's a big hole. And obviously, look, you're never going to die, James. It's never going to happen.
Well, since you're a trusted advisor, I'll take your word for that.
Yeah. And that's what people think, But I'll tell you, quickie. I have 2 sons. One's 30, you know Noah. One's 30, he's 33, doesn't matter. One of his best friends just had major cancer.
Oh, no.
Yeah, and he's come through it. But it was nip and tuck. My big son had a really good friend in Vancouver who at 38 got cancer. He's no longer with us. 1 year, done, gone. What is state of insurance and all? I don't know anything. He wasn't my client, never met the guy. 38 years old, gone.
Yeah.
Now, that's not going to happen to you because it can't, but it does happen to people your age, this year, next year, 10 years from now, and people just aren't necessarily prepared.
Here's an interesting thought that I've not really considered before having this conversation. I think if you ask somebody, what would you be willing to pay if I could guarantee you peace of mind? People would write a number that they would pay to have peace of mind.
That's right.
And so I think what we're doing when we're trying to educate on whether it's investing, whether it's insurance, setting a will, these are all good advice you've given. We're essentially trying to plan for the future, that's tomorrow, and give peace of mind today.
Which is handling risk.
Okay.
That's all it is. All myself and my partner do, we're risk managers. That's what we call ourselves. Look, life insurance, disability, critical illness, they're all have to do with risk. Now look, if you're 32 and you live till 75, 80, and you never get sick, never have a disability claim, obviously you haven't died, and you've got the right type of life insurance, etc., when you pass away, your family will get some money. But in those 50 years, the likelihood is something is going to happen that's not going to be very pleasant. What are the risks? Actuarially, as you get older, they get higher. And as far as I'm concerned, I can say this to your audience, if people haven't prepared for this stuff, they are being negligent of their families, because I've heard of stories of people who, they were great, they're in great shape, they had 3 kids, they played squash, didn't have any insurance, they died on the squash court, 49 years old. Can you imagine a family being bereft because the father said, I don't need insurance? Not my client. I just heard the story.
Yeah, well, I don't know if you know how much I play squash, but right now
it's
my number one sport.
Okay.
So I felt like you were speaking right to me.
but I have to tell you, at 49, I quit.
Yeah.
I quit playing squash. I heard these stories, and it was like, you know what? I don't need this. And I have a bad heart history family. I'm fine, fortunately. But 2 of my members of my family have had heart problems. And it's like, no, it's not worth it. People die on the squash court. So they die of doing other things. You have 29-year-old, 19-year-olds dying on a football field from heart problems that they never knew about. And that happens. Very rare. But people dying on a squash court is not rare because they didn't do the stretching, lots of things. And they had heart issues that nobody found. But why would they? Why would they look for them if they're healthy? All right? It's health is a very... Oh, and I want to make a very important point while we're talking to anybody watching this, that if you're thinking about life insurance or any of the other things that I was talking about, the time to do it is yesterday. If you're healthy today, then get it done. Yeah. Because I've had situations where people said, I'll do it. And when they call me a year later and say, I want to get my life insurance, how are you doing? Well, my blood pressure's through the roof. And I say, well, you know what? I can get you coverage, but you're going to have to pay extra. Had you done it a year ago, you would have been fine. So
it's a bit counterintuitive. The people probably feel less inclined to get it while they're healthy when it would be the cheapest.
Of course.
It's just like investing. People, when they're young and they have many years to continue to earn, it doesn't feel as pressing.
That's right.
And then you get to 55 and you start counting your years until retirement, and you're scrambling.
Time is your enemy when you're older. Time is your friend when you're younger.
Yes.
But you don't understand that concept of interest.
Compound interest.
Compound interest and all those things.
Yes.
How can you at 20? You never got educated when you were young about compounding interest.
My friend Tyler Burke, he's a great saying. He says, "Youth is," well, maybe it's not his saying. Youth is wasted on the young.
Oh yeah, it's not. It's not his.
Not his saying. No. All right. Well, I tried to give credit to him.
Sorry,
Tyler. I tried.
It's been around for a long time.
And I also, well, then here's another one that you've probably heard before, but you mentioned it earlier. The best time to plant a tree was 20 years ago.
Absolutely.
The next best time is now.
Doing things now, for all your viewers, I mean, again, it's not coming to me to buy insurance from me. I mean, if you know somebody, get it done.
Yeah.
Like, why are you holding off? You think you're going to save money. You think you're invulnerable to things that happen. Things happen. And then you kick yourself because, why didn't I do that?
I think bring it back to my personal example, like what helped me decide to, invest the time and doing it, is that it's not just the financial mathematics. It's not just about beating or losing against the insurance company and the discounted cash flows of my premiums versus no. Well, that is a bit irrelevant to the fact that what really helped me decide to do it is I want the peace of mind now. Exactly. So I want the math to work out in the future for my family and for myself.
Exactly.
It's that same way I approach investing. But I also want the peace of mind today when I'm healthy that I at least have taken care of, checked that box.
Yep.
I don't have that to-do list that I'll never get around to.
Yeah, and I think my partner and I really feel that the main thing that we are advising on is giving people peace of mind at the moment. And if they can listen to us and get the things that we recommend for their situation, it creates a lot of peace of mind, along with getting the will, because that's a huge peace of mind saver. I mean, people don't want to do it, but once they do it, they say, got our will done.
Yeah.
We're so happy.
Yeah.
Not happy, but we're
relieved.
We're relieved. That's a better word.
So I mentioned again, my son Hudson's still newborn. It's been on my mind a lot. I know you've built a business. You've 40 years in the insurance industry, and I've spoke with, I think, all three of your grown kids.
Yeah.
Can you just shed some light on what that experience was like? Maybe actually I'm going to ask straight up for a piece of wisdom.
Go ahead.
What would be your one piece of advice to me, someone who wants to build a business and build a family? And they're both very important to me.
I remember saying to my wife when I was building my business, and I was working many, many hours because I was a sole practitioner. I was an entrepreneur. I will be home every night for supper. And I was. Help with the kids, put them to bed. Sometimes I had to leave at 7:30 for an appointment. But that was one of the things that, and typically I had breakfast, depending on which kid. We have three, as you mentioned. So that was really an important thing that I found was helpful. The other thing is, and I see it now, if you're with your kid, turn off your damn cell phone.
That's a good one.
Just don't even have it near you, because I know you're going to get calls, but people can leave messages. Because if you're with your kid, and this happened to me, I wasn't that great a father. Sometimes I was thinking about business, I was playing with the kid, didn't give full attention. I feel badly about it. So if you're asking me advice, is try to focus when you're with your child, try to only be with the child, not with your business, and the kid is there gurgling and, oh yeah, you're nice, Hudson, but you're thinking about the deal, so they know that. They pick that up on that. I mean, there's lots of other things, We took our kids on a lot of trips. We felt that it was really important to educate our kids on really, like, they've been to, we took them to New Zealand and Australia for a month. And we were just five of us together. They've been on trips to Africa. They've been to Europe. They've been to different places, because we felt that, how do you teach a kid about another culture? You take them there. Mm-hmm. You can watch movies. Mm-hmm. So if you're asking me some of the things, and this would not be on the video, that's one thing. And the other thing is, when Hudson's growing up, and whatever other ones you have, talk to him like a person.
Yeah.
Don't do baby talk. Well, you can for the first 6 to 12 months, because that's all the goo goo gaga. But as soon as they were talking, we talked to them like they were adults. We didn't say, yeah, isn't that cute? We talked to them, hey, you know what, let's go, da-da-da-da-da. And I felt that that was really important versus what I saw with many people. They just thought their kids were bumbling idiots for many, many years, and they baby talk to them. Mm-hmm. So
you're robbing them of the chance to show that they're an adult, or that they're not an adult, of course, but that they're comprehending and that they can communicate.
They can comprehend you, but if you don't let them comprehend you as a real person,
right?
Then I don't know if you're.
We're good now.
Okay, so one of the things I'm going to give you, you're going to love this if you aren't doing it right now. I tell every new dad.
Okay.
Forget the moms, the new dads. Take Hudson into the shower. Hold him like this. Wash him up. Even let the water go over his head. If he likes it, hopefully he will like it. And then, as soon as he's clean and you're ready, give him to your wife. What's her name?
Lindsay.
Give him the Lindsay. He'll be in a warm towel. Boom, boom, boom. She wraps him up. Now, that's better than being in a bathtub or in those things whatever they call them. And I hated. So I developed this with our second and third child. They didn't realize it. Our first child missed out on that. They loved it. And as soon as they were sitting on their own, I'd do the same thing. I'd wash them. I'd put them down, and they'd play in the shower, and I'd shower. But it gives the dad that, naked to naked feeling that the wife gets if they're nursing, but you don't get it.
Right, the skin on skin.
It's actual heaven for you to do it. So people who've done it, they thanked me, saying that was like the best, guys.
Yeah,
that was the best advice I've ever gotten.
That's good advice
for my child. It doesn't matter if it's a girl or a boy, because they're just little people.
Yeah.
So, if you want, and the other things, just you do your best. Do your best to balance being a business person and being a parent, and it's not easy. If you have a 9-to-5 job and when you walk away you don't give a damn about what you do, that's easy. But it's hard when you're a very important person in a corporation that some of it belongs to you, and there are big decisions to make, and yet you've got this little person or little people to spend. And don't forget your spouse.
Yeah.
She's also. Oh, that was the last thing, because I know we probably are going to finish it. Is that every Tuesday night we would go on a date.
Okay, that's a good one.
And I can't remember if we hired babysitters or an in-law or a parent came by and just spent a couple hours with the kid. Often they were asleep. And it just gave. And the rule is you don't talk about the kid.
That's a good one.
You talk about, I don't know, the moon, the sun. You talk about your travel plans, I don't know, whatever. But do not talk about the kids, because you talk about the kid all the time.
Amazing.
Right?
Yeah.
So, got lots of other pieces of advice, but I think those little ones, if you want to have a good relationship with your spouse, and it's really important, because the spouse often gets forgotten.
Gary, that's fantastic. So in the 45 minutes we've chatted,
Yeah.
We've talked, of course, about your specialty in insurance.
Yep.
We talked about the differences, life insurance, disability, critical illness,
Yep.
how they work together, how they're related to investing. We talked about fatherhood and the advice that I was asking for, balancing building a business and fatherhood.
Yep.
Thanks for even sharing the personal experiences about, how visceral a feeling is when you don't know, what's going through your mind, when you don't know if you're going to be okay.
It's very scary.
And most importantly, after sharing all that, the general advice to everybody is now is the best time.
Always. No matter what. Investing.
Yeah, because
insurance.
until we have a time machine to go back, now is the next best time. And don't rest on your laurels and just say, "Oh, I've taken care of that because you did it 10 years ago." You could be leaving serious savings, or you could be not. Your policies could not be adequate for your changing life circumstances.
They aren't. They never are if you haven't made any changes.
So if you haven't done it, do it.
Yeah.
If you haven't done it in a while, do it again.
And the thing, I think I said it before, maybe I didn't. If there are many savings available in all kinds of ways, and if people want to touch base with me or my partner, I think, I don't know if our email
Yeah, we'll put it up on, this is going to be on YouTube and Instagram.
Yeah, and we're happy to, it doesn't cost anything. We can send them, for no obligation. We can say, what have you got?
Sure.
How old are you? We can give you an analysis. You work with us, you don't work with us, because I really feel strongly that most people out there are not protected well or adequately or properly, and it's a travesty.
And if you do reach out, I've worked with Gary and David for years. They are vetted. Thank
you.
So anyways, that's been great. Thanks so much, Gary. It's a pleasure speaking with you.